How to get money to flip a house. You don't have $100,000 in cash sitting around? Good, you don't need it. I'm going to show you how flippers fund deals without using their own cash. If you're stuck thinking, I can't flip because I don't have any money, watch this. You're going to learn real strategies that you need to find money for your flip, even if your bank account is near empty. I know why you think you need money to be a real estate investor. It's in the title. Real estate investor implies you have to have money to invest. Real estate is one of the only investments that does not require your own money because it is a hard asset. You see, people will loan you money to purchase those properties, to create money by improving them and then flipping them, and you don't have to use your own money. You couldn't do that with stocks, could you? You couldn't go to your Uncle Larry and say, loan me $100,000, I got a hot stock tip. Not gonna happen. Hey, crypto's on the rise. Let me borrow $100,000 to buy that crypto. No one's going to loan you money for that. But if you said, look, I have a house that I'm going to purchase, you'll have a mortgage, you're protected, so if I don't pay, you'll have the house, you're protected, and it's going to be insured in case of any kind of massive casualty that happens in the house, in case it burns down, or there's a flood, you're protected. Listen, and I'm going to pay you a 10% return on that. They are more than likely going to loan you money on that investment, so you don't have to have your own money to be a real estate investor. So please get that out of your mind as we start talking about how to finance your flips. Now, does it help if you have your own money? Of course. Cash is always king. And even if you have a lot of cash, you may not want to tie up a lot of it in a flip. I'm going to always recommend that you use other people's money. You want to keep your cash for cash flow. You don't want to make your investment so restricted that you have no room to breathe. When you're stressful, you don't make smart decisions. None of us do. So how do you go about funding your flip? Well, in today's world, you can use a hard money lender. Hard money lenders don't necessarily care about your credit. Your credit is a factor. It's important. You can't be in the middle of a bankruptcy and you can't have missed 100 payments in the past year. They don't want to work with you. But if you have relatively decent credit, even in the high 500s in some cases, you can still get financing for a flip if the flip property is strong. If the property in the deal is strong all by itself, many times a hard money lender will finance you. A hard money lender is a person, usually a group of people that pool their money together and they're willing to loan money on a short-term basis to house flippers. They get a higher rate of return because they're taking more of a risk, but the money is there, and that's what you need. You need the money there to get the deal done. That's how you're a real estate investor with other people's money. So, the first thing you have to do is buy the property. So when you go to buy a property, a normal bank's not going to give you a loan to buy the property, at least not a loan that also helps you with the renovation costs. So I'd stay away from traditional banks. Go to a hard money lender and they will usually loan you 80% of the purchase price. Let's keep some easy math here. If it's a $100,000 purchase price, then a hard money lender will loan you 80% or $80,000 on that property. Great. But now you're still left with a $20,000 gap that you have to cover. I'm going to talk about gap funding in just a minute. But now you have the renovation cost. A hard money lender will loan you the money for the renovations, sometimes up to 100% of renovations. How they do it is they will actually reimburse you as phases are completed. So as soon as you get a phase complete, you can turn that in, they will wire the money to you, and then you can pay your contractor, or if you paid your contractor, they'll just reimburse you. Very simple process. But that's how you can get 100% of your renovations financed through a hard money lender. Now remember I talked about the $20,000 that you're light on this project, the gap that you have to fill? Well, I have a suggestion for you on that. What I want you to do first is look around your world and ask yourself, where do I have access to money that maybe I'm not thinking about? Do you have a HELOC on your home, a home equity line of credit? Do you have a 401k? Did you know you could borrow up to $50,000 against your 401k with a short-term loan? You pay yourself interest back, by the way, so it's all good for you. You could borrow against cash in your whole life policy. You could borrow against an investment portfolio that you have or any other assets that you have, maybe an IRA. You might be able to borrow against that as well. You may have credit cards that have enough limit on it to cover that gap. So first look inward. How can I use other people's money in my world to cover that gap? Great. You say, Glenn, I only have $10,000 there. I don't have the full 20. Great. I want you to go out and look for a private money lender. Now, when we think about private money lenders, we think about people that are going to fund the whole deal, which is where you want to get to. That's the end goal. I've raised tens of millions of dollars to fund our flips over the years through private money lenders. But I want to encourage you to start small with someone that has $10,000. The first thing you may say to somebody is, I know you may not have $10,000, but do you have a HELOC? If they have a HELOC, they could loan you money out of their HELOC. They could loan you money out of their 401k. And you can pay them a 10 to 12 to 15% return. It's all negotiable, whatever you want to give them. And they can then fund the rest of your deal. But I'm going to take it one step further. I'm going to suggest that you don't just fund 100% of your deal. I'm going to suggest that you fund 110% of your deal. Borrow into your profits a little bit. You know why? You're going to have cash flow needs. During this process, for a hard money lender, you're going to have to pay interest payments for the 3, 4, 5, 6 months or more that you own that property. You may have insurance payments you have to make. You're going to have to keep track of maintenance and trash costs. And there's certain costs that are going to come with owning a house that you want to make sure are covered. You want money to pay the contractors up front if you need to, and you can't wait for the draw money. There's a lot of cash needs when you're going through financing a flip. So instead of borrowing $20,000 in that scenario, I'm going to encourage you to borrow $30,000 in that scenario. Why? Now you have cash. Now you can breathe. If you can breathe, you can run your flip much better and from a calmer place, couldn't you? Okay, let's say you have no intention of wanting to borrow money from somebody else or borrow from a hard money lender. Great, let's talk about sweat equity. Do you know there are people that will partner with you? They might be the money lender and you might be the sweat equity person, the person that goes out and gets the deal done, manages the whole thing, flips the whole thing, however you want to structure it. And then you'll split your profits 50-50, 60-40, 70-30. People always ask me, Glenn, how do I set it up? Here's the good news. However you want to set it up. Whatever's a win-win that you both agree on. Here's my advice to you. Get those deals in writing. Always have a joint venture agreement. If you don't know what those are, make sure that you please go on our channel, check it out, and learn about joint venture agreements. But in a joint venture agreement, you are protected in the event something goes south or the partnership fizzles away. Now you have it in writing who's responsible for what. Or worse off, if one of you passes away or gets incapacitated during the deal. You don't want that to happen, so make sure you have everything in writing, even if it's a close friend or family member. And lastly, you can always use creative financing to try and get a deal financed as well. You may not have to go to a hard money lender. You may not have to cover any gap funding. You might be able to actually get the money from the seller. Sellers will actually finance some deals. You could do what's called a subject to, where you just take over their existing payments. Again, in this video, we won't cover that in detail, but there's plenty of those videos on our channel, so make sure you check them out. And there's 14 other ways that we train with creative financing to get your deals done. Having a lack of actual cash to make a purchase and renovation to be a real estate investor should never be your excuse. You want to learn all the different ways you can do it because every situation is different. And the more options you know, the more ways you're going to be able to buy a house and the more successful you're going to be as a house flipper. Money finds good deals, but only if you're chasing the right ones. Go watch the next video, the crucial steps that new investors always miss, so I can teach you exactly how to buy the best property for you that will literally attract money. Go watch it now. The link is in the description below.